The SPY ETF fell heavily on Black Friday off Omicron fears in a move that caused many to question whether stocks themselves were on special offer. The SPY ETF's price has toggled back and forth since then, and retail traders have by and large been buying the dip in the market, pumping $2 billion into the likes of SPY and its NASDAQ 100 tracking peer, QQQ. Sentiment rather than fundamentals is driving the market at the moment and is likely to do so until the scale of the threat that Omicron poses becomes apparent. ARK Innovation owns a number of high-profile growth stocks that benefited from the lockdowns that the original COVID-19 outbreaks created. None more than Zoom Video, which fund manager Cathie Wood has been buying into once more, even selling some of ARK's core holding of Tesla to buy the video calling and conferencing stock. Could Omicron turn out to be the catalyst that drives Zoom Video and the ARK ETF share prices higher from here? TLT, the 20-year plus Treasury bond ETF, with risk-off sentiment driving money into bonds, driving up their prices and those ETFs that track them. The uncertainty among traders has helped long bonds more than those at the shorter end of the yield curve, where conflicting narratives have made it almost impossible to make a judgment call. Omicron news hit the oil price hard, and the USO and US Oil Fund saw its price fall by 12% in the last 7 days. Energy markets were spooked by the prospects of fresh lockdowns, just as producers are trying to ramp up production to meet growing demand. Crude oil prices famously went negative during the first lockdown, as storage facilities were literally filled to overflowing by excess supplies of crude oil. Neither WTI crude prices or that of USO are likely to bounce back until there is a clear indication of just how much impact Omicron will have on the economic recovery. The XLV, the ETF that tracks the S&P 500 healthcare sector, was understandably impacted by the emergence of Omicron. Vaccine manufacturer Moderna saw its stock price bound by almost 25% over the last week, whilst at the same time Dexcom, the poster boy for healthcare growth stocks, fell by 9%. Just 17.8% of the stocks within the S&P 500 healthcare sector are above their 20-day moving average. However, the recent low point for this metric was just 3.18% at the end of September, so we may see the sector and ETF come under attack once more.